Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we saw yesterday was what we had, we were looking for, at least if you were a bull, taking out the mid-band and extending, and kind of turning that bounce from Tuesday afternoon into a multi-day situation that then starts to squeeze and gets the bears on the run. I mean, it's basically what every pullback in this market has been built on since the beginning of 2013. But for me, going into this morning, it's more about where yesterday stopped. Okay, the weekly pivot that we use in the room comes in at 21.24.5. Okay. The high from yesterday was 21.24.25. So basically a tick shy. Hasn't been challenged in the overnight tonight. The bears' best chance to reverse this move, reverse yesterday's move and make that into kind of just a relief rally one-off of a day, is to maintain 24.5 as resistance and to begin to gradually push back down to the mid-band, which is coming in at 21.09 this morning, push below and ideally close below that area. If they're able to do that, they will be well on the way to reasserting themselves as potentially being able to do a little bit more with this down move. What we're seeing in Globex, at least early this morning, is you're seeing the daily pivot, which is at 21.15.25, try to be support. We've been there a few times. We're there again. I'm actually watching the 5-minute chart out of the corner of my eye, seeing if it's going to break this time. It looks like it may want to go through this time. If it does, then your next area down is 21.12, and then you've got, like I said, 21.09 underneath. The low from yesterday sits at 21.01.25, and the 800-pound gorilla in the room is the 50-day exponential moving average at 97.30 down to the lows of Tuesday at 20.96. Okay, if all of that can be reversed, and it doesn't have to be reversed today. People ask a lot of both sides. They get, they don't accept inside days as a part of, of what markets do. They, if they're not getting, reversal days or negative outside days, where we're busting through highs and breaking down through multi-day lows, that they assume that the other side is not still in control. Yesterday was an inside day, and it stopped in an area where it couldn't really stop. So the bulls have to use this morning to take that 24.5 area back. If we're just pulling back here into another morning dip that's going to go ahead and take out a weekly pivot, then I'm pretty comfortable saying that that's it for the bears, at least for a few days, and that the highs are under threat. If the bears can persist here, can stay below 18, can break through the 15-quarter daily pivot and hold it, then they have an opportunity to head down to 21.09 and back down to 2100. Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Come check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.